Here at WeWork, going to go meet with Roman Bodnarchuk. He's a real estate developer. I actually met him a decade ago, and he reached out for some advice. I actually don't have a lot of context. We're just going to roll into the conversation, chat. We're here at WeWork in Toronto, and just bring you along for the ride.
What are we doing today?
So I'm starting a new company called Tapestry.
Cool.
And it's basically, we're buying RV parks.
Yeah.
And we're making something really cool because there's really been no innovation in RV parks for 50 years.
Yeah.
So imagine all these people at WeWork, they love community, they love social, they just love this whole concept. But they've never seen, they've never looked at the stars and actually seen stars. Like, you live in a city like Toronto, you don't see stars. They don't smell campfires. They don't know what it's like to jump into a clean water lake. So I want to give them that experience, that community experience, but 90 minutes outside Toronto is the first one.
Yeah.
So these are small, really cool looking cabins, but very architecturally, hip and cool. But it also has a social area where there's a restaurant, so you don't have to cook, you just go for your meals. We prepare the campfires for you. So it's really a 2020 version of a hip and cool resort.
Yeah.
That we're going to sell these. There's 50 of these. We're going to have 50 of these.
Yeah.
So you buy it for under $200,000, so very affordable. And the business model, it's a land lease. So we get money forever because at all our RV parks, somebody owns the land and then you just pay, $200-$300 a month.
Yeah, it's a condo fees.
Yeah, so it's exactly condo fees. So it's really
And you may know something about condo fees.
a little bit about
Just a
condo
little
fees.
bit, yeah.
So the idea, it's a great reoccurring business model. So the problem with my business model right now is we sell all these projects, we only walk away, there's no money.
Yeah.
But this is passive income forever. And there's 17,000 of these parks. I only want to do waterfront ones, so we're down to a couple thousand. But there's a huge opportunity that no one's addressed to make a cool hip, again, like WeWork, focus on the millennial.
More for the cottage life of the WeWork.
Yeah, it's your weekend escape.
Yeah.
It's your escape to get out of the. There's 1 million people in the city that live in a 600 square foot box and only see concrete. Like, you don't see
So it's
trees.
interesting because in Florida, my dad entertained staying at a place called The Village, which is down in Florida. It's 350,000 seniors.
You got it.
And one of the rules is the opposite of what we would have on a curfew, is that if you're not at least 55 or older, you can't stay the night.
Yeah.
So you're essentially trying to create a community for millennials.
You got it.
Got it. What can I help with?
So the last time I raised money was 17 years ago. I raised $1 million from VC. So I'm a little bit out of touch. So
It's changed a little bit.
So am I doing a Kickstarter campaign?
Yeah.
Am I doing a general offering and going to high net worth guys? I'm really thinking about because I don't want to raise money for a resort. I want to raise money for the whole entity because we're gonna be in the acquisition business. We're gonna be doing these things. So I know how to raise money on one deal for real estate, but I'm looking how do we sell this the way WeWork raised capital so we can really scale this.
Yeah.
So that's the idea. So it's a fundraising question.
Yeah. So the interesting part is I'm pretty sure WeWork had a working model before they raised their first significant round of funding.
Might be right.
I'm almost positive. I actually have spoken on stage with one of the founders, the long hair creative guy.
Yeah,
I should probably get to know people's names a
Yeah.
little bit better. But and honestly, in the early days, I thought this is kind of crazy. Like, how are they going to? And a lot of people did, justifying the valuations, and they had a pretty impressive growth rate. And then you come here and you're like, okay, I get it. When 20% of the tenants are corporate companies and not startups, you start to see the model. When you see the trends of kind of own nothing access to everything, right? And people wanting fractional ownership to spots and not having long-term commitments. And I mean, I'm pretty sure you don't, you get a lease here, but you don't have to commit.
It's month to month.
Literally,
It's month to month.
that company right there can just bounce.
Everyone's month to month. There are no contracts.
So I think that's a trend that's here to stay. I think that the Uberification of most assets and resources is a real thing. When it comes to fundraising, because it's interesting is you have it. What you're doing could go, and look, I've been involved in real estate. I've been involved in technology. So it's always, people talk about platforms, right? So if you think about it, the thing you want to build is high level, and that's kind of a platform. And then the individual projects are the things that need to get funded. So it's kind of you could do all three, right? If I was building this company, I would definitely try to figure out what's the unit economics for one location.
Yeah.
I'm assuming you've kind of run the numbers, 90 minutes from here.
Yeah.
You've got.
Yeah.
So tell me about kind of like what's the infrastructure? Well, I guess why do you care about doing this project? Step one.
Okay, so I was lucky enough at age 30 to buy a little condo about 2 hours outside the city of Muskoka. And it was like my decompression place. So Monday to Friday, I'm killing it, But the only reason I survived the last 17 years is I had a place to get out of the city where I just relax and I could see the stars and breathe fresh air. And it was just that place of like solitude that got me grounded. And then I come back in the city and hit it for another week.
Yeah.
And that place that
It's
I've always
the sprints
had.
within the marathon.
Right.
Yeah.
And I think that when you live, again, if you're one of the million people that live in this concrete jungle of the city, and there's a lot of big cities, you don't get that escape. So I'm trying to create that affordable, I know what it's done for me, what it's done for my family, my kids.
And what's a Muskoka investment today?
Yeah, so like just the worst horrible lot you could find is like $500,000.
Yeah, just for the land.
Yeah, just the land, and then it's just a nightmare of maintaining, etc.
Yeah.
And under the new mortgage rules that take effect in Canada January 1st, no one's going to qualify. Like, they've made it the most stringent, draconian laws we've ever seen any country in the world do. So people won't be able to refinance their own house. They're going to go to their bank and go, I want to refinance mortgage.
Oh, you mean we're changing the laws, and people that want to refinance,
Yes.
they may not qualify under the new law.
Yeah,
So essentially, they're grandfathered in if they keep.
yes.
As soon as they tweak, then they're going to.
Even when you go to renew your mortgage, you have these new stress tests and all these crazy
You
things that
own
go.
the whatever value ratios.
Yeah, and it's all about your income. So if you're an entrepreneur, for example, and you don't have like a huge T4, like you're done. Like you're not gonna qualify for your own mortgage. So the mortgage you qualify for this year, you won't get next year. So imagine second home. So if people can't even qualify for their own home, there's no way they're going to get financing for a cottage. So I want to create a model where it's finance proof. So we've got a way that with 20% down, we can finance anyone without a bank. It's under $200,000, so it's affordable. And it's a piece of paradise. And it's a community of like-minded people. And it gives you all these amazing social benefits.
So I'm on board with that. The economics of the business model, what do they look like?
So it's only about $2 million of infrastructure that we have to put into these resorts. It's only a couple $1 million up front.
Does it exist already, or are you buying raw land and developing?
We're buying RV parks that have already been around for 30, 40 years. But when you go to those parks, they look like a traditional RV park. The first one has a great restaurant that we're just going to do a little bit of a makeover on, make it kind of cool and hip. So we're buying existing businesses that already have cash flow, actually making money, but we're changing the business model. Again, it's kind of like the Regis Business Center.
But an RV, so RV park typically have lots that they rent and the RVs are brought in by their customers.
That's right.
Or is this different where you guys are going to provide the RVs?
So what we're going to do, and in year one, we're bringing a bunch of Airstreams, because Airstreams are kind of like the cool hip thing that people want to stay in.
Tony Hsieh in Vegas has an Airstream park.
Yeah, you got it. So part of it's going to be part of for Airstreams, and then we're going to have a cabin that you can purchase made of containers, like really cool containers. So you have an option. You could be in the Airstream neighborhood, you could be in the cool cabins, and they're all going to be for rent. So even if you buy a place from us and you're like, you know what, I don't think 10 weeks in the summer I'm going to use it, well, you'll put it in our rental program, it'll pay for itself.
Cool.
So we've
fractional
got
ownership for RV
it's
parks.
actually full ownership. The actual cabin that you're going to buy is full ownership, and you can take it anywhere in the world. So if you decide to move to Costa Rica or Mexico or Moncton, you can take it with you. You could take it with you. It's portable. So it's 100% ownership on that, and that's what we're financing. But it's a land lease. So just like any RV park, you're paying a monthly fee. So that's the recurring business model for us. So what we're excited about is we're creating a new experience that doesn't exist. Like if you look under glamping or I want to go to a cool Airstream place, this doesn't. All these ideas, these fantasies, there is no.
I know. I rented an RV this year because my brother's hardcore and he asked us to join him. And it's tough because everything's recorded these days. It wasn't for me, and I'll tell you why, is the camping experience I had was people that really enjoyed starting to drink at 11 a.m. and they didn't really do a whole lot. And that's just not, I'm kind of like, let's hike that mountain, you know what I mean? Like let's do something challenging. And I get it, some people do it to unwind. it's kind of like I like to play hard, and I don't know, that's just me. So we had to rent this machine, we had to drive it there, we had to set up, I had to deal with all the the toiletry stuff, which is just ridiculous.
Yeah.
It just wasn't for me. I'm more of a rent a chalet on a lake, Airbnb style, and that's my vacation. So I kind of got to figure out, but I like this idea. I'm obviously a very social person. I like the community aspect. But talk to me through the top line potential and the investor ROI. Like, how does an investor make money in this deal?
So the way we've looked at an investment offering is guaranteeing like a 12% annualized return.
Okay.
So we think by taking all the risk away and giving them, basically it's in 12 months they can realize their 12%, and then give them an option, basically a convertible option to own shares in the company. So that's kind of that's the model we've been thinking about.
How do you get them at guaranteed 12?
Well, we're buying existing businesses that have cash flow. And then all we're forecasting is, well, how many sales can we do in that time period? But we're going to take the investor proceeds and take that 12% and put that in a trust account. So their 12% is already set aside. It's already locked in. So we're pretty confident because we're buying existing businesses.
Yeah.
Even if our business model failed, we're still buying existing businesses that have been running for decades.
Are these cash flow positive?
Yeah, we're buying cash flow positive businesses.
And how, I guess, if you're going to buy those assets, and obviously you're going to do it with some form of debt, or are you just going to finance it through the whole investment?
So the first one, we've got a VTB. So we're putting up like 25%.
VTB.
Vendor take back. So
cool.
There's a lot of these RVs are owned by
big
retirees.
deal.
So they don't mind if you give them a couple $100,000 and you give them a high return. They're happy to do that.
Yeah, they just need somebody willing to value the property.
And the thing about WeWork, they don't actually own any of the real estate.
Yeah.
So we could actually test our model, not even doing a long-term lease on our own property. Hey, we'll lease it for 15 years from you.
Yeah.
So that would be a lot less capital intensive. So that's another option for us.
So what's the challenge then? I mean, if you actually have a model that guarantees 12%, most investors in today's market would be happy with that.
I guess the challenge is I want to make sure I structure it right. Should I be doing a Kickstarter campaign? Because I've heard like a hotel got $5,000, or do I do a traditional real estate kind of limited partnership and you go talk to 25 accredited investors? I guess I'm looking at your insight in terms of what would you do if you had to raise a couple $1 million today?
So what's happening in the consumer space, especially in the consumer electronics space, is the Kickstarter is more of a market validation process. It's not necessarily a fundraising process. A lot of these consumer electronic companies, and I've invested in like 25 like Kickstarters where I've gotten stuff. Sometimes I don't get stuff. That's kind of the running joke. You just all of a sudden something shows up in the mail and you're like, holy fuck, a year later, finally get it. But the truth is many of these companies might have had some other way of proving the model, and then they raise capital, and then the Kickstarter is really a way to go to market. Right. So you kind of want to think about it as like the go-to-market is the Kickstarter, but it's not the funding economics. Because typically you're going to do it either at a loss or a break even. Most consumer electronic companies do it at a loss as a way to prove the market, just to go to market. So that's why I think it could be all of the above. If I was doing this, I mean, I'm a big fan of not having a lot of investors, just having a few investors, and I'd want the same, and you know this because you come from the real estate world, is I want investors that are going to be able, like, if I can prove success for them in this deal, that I'm going to get this return. Like, we're going to get the next deal through the same level of investment. So do I want to do Kickstarters over and over again? No. I would much rather say, let's fund the core business through the right, real estate investment vehicle. And that's why I said there could be a technology aspect as well, right? As you have this at scale, as you perfect your model, there's arguments for scale, right? WeWork had to work on the unit economics per location, work on the trending data, look at the workplace migration trends to then finally argue the valuation that they're receiving. It's not a real estate valuation, as you know. So I think what you'd want to do is find the real estate investors that are going to back this kind of deal because it's a unique product. They're going to look at it through the same lens as they would any other real estate deal. If you can guarantee the 12%, which is not bad with the VT, what do you guys call? I just call it owner.
Vendor take back.
So vendor take, so VTB. So they're used to that, right? Where businesses, mostly private equity, I would say, are used to VTBs. I don't know if real estate if this is common, but because usually it's a little bit more liquid if they want to go to market. Then go with those investors for the core business, and then use a Kickstarter crowdfunding campaign to actually sell out the thing as a marketing initiative.
Okay, that makes sense.
Yeah, because like
well,
I feel like we met over a similar project that was going to leverage the internet to sell out the property. I mean, it's the same concept, right? Except today you're leveraging the platform. Now the truth is most people think that the Kickstarters, Indiegogos, crowdfund or whatever are going to bring the demand. It's about 10%. Right. So if you want to do a $250,000 Kickstarter, you're going to have to bring, they're going to bring about 25,000 of that.
Right. Gotcha.
A lot of people don't understand that. So there's ways to do that. For example, there's probably comparable Kickstarters that you've seen, right? You mentioned a few.
Yeah, there's a couple hotels.
What are some of those?
Yes, there's a hotel that I saw raise a couple $100,000 this way.
Okay.
But I think you're right. What they did is basically offer the rooms, so people are basically buying discount.
Pre-buying.
Yeah, so you're right. It's kind of
go to market.
It's really creating a market, but it's not really a fundraising game. So they still had to do
the
real
hotel
estate
had to
financing.
build, yeah, the hotel was built.
Right. Yeah. Okay, so that's good. So it's kind of step two.
But here's why I say that. One of the ultimate strategies for getting your Kickstarter distribution and awareness is doing a reverse image search. So essentially, if you can find the images and videos that were used on that Kickstarter, and then you go to Google, you can actually do a reverse image search. So most people don't know this.
Never heard of that.
Yeah, so if I took a picture of you, I could actually go on Google, reverse image search, upload the picture, and it would find all the reference points of where that image was used on the internet.
Wow.
So here's why that's powerful from a crowdfunding campaign is, and I'll give full credit to my buddy Clay Bear who taught me this like 5 years ago. He's the crowdfunding expert. Is you can use that's how you find the press that's covered that project.
I see.
And birds of a feather flock together. So like if they're going to cover that project, they're probably very inclined to cover your project.
Okay.
And that way it builds your hit list. So that's why I say like if you're going to do a crowdfund, I have a friend that's done like a high-end Apple guitar case-esque product. I've had friends that have done like the ultimate what was it? It was a cooler, the ultimate cooler, cool cooler or something. It was one of the biggest Kickstarters ever.
Yeah.
And one of the things you can do is that one, and then the other one is Facebook. I mean, really, truthfully, it's the ultimate, right? Yeah. So you want to use the prep work to a successful Kickstarter is reverse image search to find out the press media outlets, build those relationships up front. So you build a list of, let's say, 75 press outlets. Yeah. They want the exclusive. You're giving it to them. On December 15th, we're launching this new project. Here's the video. Check it out. Okay. Oh, that's so cool. Cool. We're scheduling media interviews.
Okay.
Right? December 1st, we're doing media interviews.
Yeah.
From the 1st to the 14th, we're essentially going to be doing these interviews. We can do them on Skype, we can do them on whatever you want. Yeah. And we've honestly already got most of this funded just because we have a really large network. Here's my background. And we really want to give you an exclusive into whatever angle you find most appropriate. Maybe it's the architecture, maybe it's the business model, maybe it's the future millennial story, whatever it is. That gets your press on board. And then what happens is you boost those coverages on Facebook.
Right, so you're running ads boosting.
Running ads on the best performing ones that are driving traffic because those things are going to have a viral coefficient based on their publishing and share. So let's say you get covered by 25 outlets, there might be only 3 of them that are actually like, right? They publish and all of a sudden it's like 25 shares, 100 shares, 1,000 shares. Yes. Those are the ones you throw ad spend on. Right? And you also throw some on yourselves and just see like what, then you look at your refer traffic to say, are those articles sending more traffic cost per, essentially I'm spending $10 to boost that ad. Is that getting a better amplification to my target audience that's converting on Kickstarter to people committing to the project? Yes. Or do I send them directly to the Kickstarter? Typically in today's world, promoting other content that's really well positioned for their audience to convert is better than sending to a direct landing page.
That's interesting.
Yeah, and then I don't know if Kickstarter allows you, but then you remarket them. Then you tag them, you give them pixel, and or at least they go to your Kickstarter page or some kind of about page. Somehow you want to target them, and then that's how you remarket. And so that would be independent, and that would actually be one of the strategic initiatives that I would consider speaking about in the pitch deck.
Okay.
Right?
This is our marketing plan. Yeah.
This is our go-to-market. We're going to do this. We're going to go X. Here's what we brought. Here's the expertise we brought on board to execute this.
Yes.
And then investors are going to go like, wow, so really my exposure is low. I'm buying an existing asset.
Right.
It's already got positive cash flow.
Yeah.
The NOI isn't crazy based on comparables.
Right.
It's the essentially the option or the bet to be involved in the future, right? Because this is not a one-off. This is actually a platform.
Yeah.
We want to prove out the unit economics with this first project. We're going to learn. We're going to reinvest into the second project with all the learnings there. Second one will get better and better. I mean, I guarantee the first WeWork had different economics than the 15, right? And now they got it really dialed in. They understand how to deploy. I mean, how quick did this place sell out?
They're incredible. Yeah, it was sold out before it opened, and they got a new one I went to see today, and like literally in 90 days from when they sign, like they're literally renovating these places and getting them up within 90 days.
Perfect. So they've refined their model, no different than a franchise prototype will. I mean, I have a lot of friends that build out franchises, and what they perfect is how to go from box to fully built out unit to launching to profitable, break even to eventually fully kind of like commercialized square foot revenue. On to the next one. And that's the economic engine that they're building. And that to me, for this kind of project, especially because it's like, I say this for like franchises or marketplaces that have a local component that are very geographically dependent, that's what they're building. They're building their per city deployment playbook. So when Uber started in San Francisco, for the first 16 months, they were just building their playbook, their institutional their best practices, their et cetera. Then they launch in, I think they went to LA next. I forget the cities. I was early friends with those guys. And it's like playbook. Sprig, I invested in Sprig Food Company. Unfortunately, they failed. Super fun ride, 30-some million spent in 3 years. But that was like, let's build the playbook. So I feel like that's the conversation you're having with the investors. The go-to-market looks like that. I mean, what are you looking to raise?
From an investor point of view.
$4 million is the target.
So it's not crazy.
No, it's not a crazy number.
Okay.
And it's backed by real assets.
That's what I'm saying.
Yeah.
Like that's actually like
it's not
that's
$4
not
million
crazy.
for an idea.
Usually I get a call for
It's-
25 million.
Yeah, no, it's
like,
$4 million, but it's backed, with
cool. $4 million for one project.
Yeah.
These people are going to buy into the project. And are you saying those people have the option to essentially be part of the ownership?
Right.
Okay, I wouldn't add that at first because it could cloudy the conversation. I think that what I've learned in business is explaining what it is sometimes hurts you if you make it too complicated.
Okay, give us some.
Yeah, sometimes it's like, okay, I pay 200 grand and I get X and you're gonna rent it for me. So at the end of the day, if these numbers hold true, the real total cost of ownership is Y. Right. I get that. As soon as you add another dimension, like those network marketers, and if you get 6 friends and all of a sudden that comes down by 6% and it's like, it's the analysis paralysis. I'd rather say no because I don't understand it.
Right.
I'd rather simple, even and you know this, same size units, same size amenities, same, the more you can say it's this and not that, then people can go yes or no. And then all your marketing guides them towards the decision of that. Not if you have 3 different flavors. It just gets complicated when it's too many. So I would say, that's interesting. The investors, though, this is where you could kind of play to their wants, is saying when this is successful, our plan is to deploy this across. How many other sites do you think this is going to work for?
So
you said a couple hundred.
Yeah, I want to target the big cities. So I would say
if you do exist,
there's probably a dozen in the next couple of years that we would really aggressively pursue.
Perfect. So when this works, not if, when this model works on that location, you have 12 already scoped out, and it'll close on 9, and similar economics will work for there. And the truth is once we do that initial go-to-market, we're going to understand the demographic of our customer. We don't need to do that again. Right. Because we already know who they are. We know what they spend. I always call it, what do they read, what do they buy, and where do they spend their time? We'll know those things. And if 80% of them are WeWork customers, then good news. We have enough people on Facebook and WeWork that we can market to actually sell it to the rest of them based on our comps.
That's right.
So that's the model.
I love it. And do you have a particular company that you'd recommend that could put together a whole Kickstarter campaign? Is somebody built a business on this? Where we'll launch your Kickstarter.
Here's the challenge, and Clay, I would say go check out his things. I think it's crowdhackers.com. Clay Bear crowdfunding. He's got a website on it. I'm pretty sure he doesn't do consulting on it anymore, and the reason why is unfortunately most Kickstarters are probably lower than a non-for-profit, meaning that they don't even have enough money to fund the business, let alone. So typically nobody's really tried to build a consulting business around it. Not to say that there's a ton of great information. The truth is you know, I would find, and this is the way I do everything. I would make a list of the top most successful Kickstarters, recent Kickstarters, because things change over time.
Sure.
So let's say in the last 12 months, what were some of the like top, and predominantly like within, generally speaking, your customer focus, right? So it may not be real estate, but it might be consumer electronic focused on millennials, right? What were the top 25? Who are the people behind those companies? Reach out to them for advice. You'll start to triangulate some of the best practices. They might recommend a PR person, a podcast person, a website person. Like at the end of the day, you might have to put together your own team, but they'll at least give you some of the best practices. And what I've learned, especially if it's people recently, like when people are raising money, reaching out to entrepreneurs that recently raised money or closed their round is actually a lot easier than reaching out to somebody that's done it a long time ago or has done it many times, because those people just finished doing it almost like I guarantee they got advice, and they didn't pay for that. So like it's almost like their opportunity to pay it forward. So if you go reach online for like who's raised capital recently or who's done a successful Kickstarter in Toronto, and you like reach out to them and said loves 15 minutes to talk about a Kickstarter program. He's got 99% chance they're going to say yes. They're geared towards that.
Would you completely forget about going to VCs, or do you think based
it's not a VC model yet?
So until you can have scale and you've built a couple of
Here's what VCs look for: 100 million in 7 years. And I'm not saying you can't argue that today.
But you got to prove it.
At the end of the day, what's happened in the markets, which changed 16 years ago, how long ago did you raise that $1 million? 17 years ago to today, is the risk profile has reduced significant. I mean, a lot of people forget, I think it was called Color. I mean, they raised 36 million. This guy was like ex-Apple. They built this like social network based on photography. It was called color.com. I'm pretty sure. My buddy Peter Pham was involved in it. The guy essentially like left Apple to do this. All these VCs put in a ton of money. You just seen it recently with Juicero, right? Ton of VCs put in a ton of money. Like what's happening is I think finally, and it was already getting better this way because I think AngelList and it's just the cost of testing ideas is really low. And I think what investors, I know for myself, if somebody comes to me without a product in the market with customers, I just assume, I'm just like, if you can't do that in today's world where infrastructure cost is zero and you have access to development talent all over the world and anybody can learn how to code, online for 15 bucks a month, if you can't do that, the chances of you actually succeeding when business becomes difficult is very rare. The only exception is repeat entrepreneur that just doesn't have to do that. Right? But the truth is I also have learned over time, I call this the struggle line, that a lot of repeat entrepreneurs think the second or third time it should be easier, and they don't do the things that made them successful in company 1 and 2 the third time, and usually they hit the struggle line, meaning that they think, well, I'm just going to hire people to build this out, and I'm just going to get this done, and I'm not going to be working 100-hour weeks and and it's going to be a side hustle, and all these characteristics that in hindsight, it usually gets really difficult and they either lose a lot of money or they decide to roll up their sleeves and make it work. And when they make it work, and I ask them, what was true about that? And they said, well, I started doing the things I used to do. Right? Which was talking to customers, which was manning product roadmap, which was, there's a reason why you were successful. And so I would just say investors today want to see more proof before they put their capital at risk. And the only reason is in a world of AngelList, you're competing against every other deal. Like it used to be information kind of obscurity, meaning that you as an entrepreneur and vice versa, the VC definitely had more information because they're doing dozens of deals. But even on the entrepreneur level, like the entrepreneur could create buzz in a community that wouldn't be validated. Like I remember back in the day, like you were able to like create hype in your city that the local high net worth people just couldn't understand. Or it's kind of like Bitcoin today. Like a lot of people put money in because they don't understand it, but they don't want to be the guy that doesn't get involved in it. And that used to be true in the past, but now because of the way the laws have changed or angel investing and investment opportunities, anybody could go and say, I want to do every deal Dan does on Angel. I don't do a syndicate, but I have friends that have syndicates. And essentially you can co-invest.
See what they're doing.
You can literally say anytime Jason Calacanis does a deal, I'm in on 10Ks. Yeah, Angel.
I didn't know you could do that. That's incredible.
next level, right? So all of a sudden it's like, I want to be an angel investor. I don't have deal flow, but I know this guy because I follow him on Twitter or his blog or his podcast, and I'm just going to do every deal he does. And then that guy, all of a sudden, instead of writing a 25K check, he's able to write a 250K check because he's got this syndicate of people that. That's a today thing. This is 3 years ago.
So AngelList has been doing that for that.
3 years, I think there's been syndicates. Yeah, so it's to me, it's like when that's true, that's what the investors want to see.
Yeah, that makes sense. So
Dan, sorry, we just have to wrap up soon. Like,
Okay.
yeah, no problem. So just one question. You do these founders dinners.
I just got back from one, after lunch.
And
Love it. I love it.
Tell me how
You want to hear something funny? Is I never pulled the trigger on this, but I always wanted to do it. When I was raising my round for Clarity, I was in a fortunate position only because of the amount of excitement. I honestly had previous investors I made money for, which is always, step one, make somebody money. Step two, ask them for more money. And I wanted to, and I had incredible investors for Flowtown, like really Travis Kalanick from Uber, Steve Anderson from Baseline Venture, invested in Twitter, Instagram, Heroku, like just an incredible, he was on the cover of Forbes Golden Touch. I mean, one of the first original super angels. He led my round in Flowtown, and subsequently he led the round in Clarity. And I thought, because I read about this once where this entrepreneur invited all the potential investors to a dinner at his house.
Yeah.
And he pretty much said to like a dozen people, at the end of the night, I'm going to pick one or two of you. And this is my opportunity for you to get to know us and for us to get to know you. And we really want to see how you interact with other people and ourselves. And let's have dinner. And at the end, they made a decision. And so that's interesting, right? That's kind of like the same version of like, groups selling at a real estate, network.
Totally.
Yeah, so it was interesting. I never did that because I didn't have to, and it would have just been a lot of overhead and scheduling. But we did raise the round 80% complete and then use AngelList to just amplify the awareness so that I could then, that's how I got Mark Cuban, that's how I got a few other investors for Clarity.
But you don't think I'm ready for AngelList for this?
No, I think, so my rule for AngelList is get the round 60 to 70% done. So I coach a lot of entrepreneurs in B2B SaaS, and one of them just ended up doing this. They essentially got, I think they were raising 1.5, they closed 750K, then use AngelList to finish off the rest, essentially the other half. The idea of using founder dinners to start to build relationships with those potential investors, I think is brilliant.
Okay.
The key is you can't talk about raising for this idea yet.
Right.
So if you invited me and other founders, you would say, we'd be like, hey, Roman, what are you working on? And you're like, well, I'm working on this really interesting real estate deal, da 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 da. And then I go, well, are you going to raise money for that? And you go, no. I go, oh, that's too bad. That sounds super interesting. I say, cool, I appreciate it. And you just enjoy, everybody talks, blah, blah, blah. Yeah. The reason why is because people always want to be part of the group that they shouldn't be in. They always want the thing they can't get. And look, if I'm sitting there as a real estate investor and I know there's 5 other real estate investors and I start hearing that like every 2 weeks this guy's organizing real estate dinners, then I know he's going to close that investment when it opens up. Right. So you do that for 2 months, you maybe get introduced to 50 potential investors. Yeah. And then one day you say, look, we're raising $4 million. Here are the terms. Yeah. We weren't going to raise, but we just had so much inbound interest. And we thought some of these people we've met, we really appreciate their expertise along with it. Plus, this is a bigger deal. The 4 is just the beginning. It's really an option to get in on the 100. Let me know. I'm going to be here if you guys. I did that for Clarity. That's so I actually emailed everybody and said, when they were emailing me about the deal, I said, here's my cell. Call me. I'm sorry. It's really busy. And I'm going to make a decision on how the composition of the round is going to look. Like today, here's my cell, call me. Yeah. And I had, I remember, I think it was Howard Lindzon, really incredible investor, real estate investor, or financial investor. He's like, Dan, what are you doing? What's up? Like I knew him. He's like, saw you on AngelList, I want in. And I was like, well, there's only 25K left. He's like, I want 50. And I'm like, I don't have 50. He's like, get rid of somebody else. Like, I want 50. Like, I want to do 25%. I want 25 of my fund ball. And I was like, you want me to kick out Marquis? Like, that's not going to happen. And, but I think it's no different than anything else. It's like build the pipeline, then pull the trigger, and then pick and move on. Because the challenge with most fundraising, if you do it any other way, is that it can really just suck the life out of you. Right. It can be an ongoing thing that never actually gets done. And Roman,
that's awesome.
Hopefully that was helpful.
That was amazing.
Awesome,
Thank
man.
you very much. Hi, it's Roman Bodnarchuk, and I just had the most incredible 20-minute interview with Dan Martell. And I had the privilege of meeting him about 15 years ago. And I've watched him flourish in his careers and his companies. And I'm starting a new company today. And I wanted to get his fundraising experience. And wow, he completely blew my mind with the information he shared with me. It was incredible. What Dan taught me literally in 20 minutes would have taken me, months or ages to figure out how to raise money today in 2017, how to raise it really effectively. So we talked about Angels List, we talked about a Kickstarter campaign, some really incredible strategies that I never would have come up with, honestly, on my own. So I'm really, really grateful that I had this session with Dan. I think anyone that's listening that has a real business and a real business challenge, they need to get on a plane, they need to get on a train, get in a car, whatever it takes to get to Dan, because in 20 minutes he could save you 5 or 10 years, could save you a decade of your life. So I highly encourage you, if you're able to get Dan's advice.